Despite a rather steep decline in the dollar, oil prices remain relatively stable. Even if the currency market extends a correction today, things in the energy market are unlikely to change. Oil traders are now focused on fundamental factors. Investors are currently assessing prospects for global oil supply and demand based on a trade data from China, the world's largest oil importer. The country reported a worse than expected drop in exports, which somewhat clouded the outlook for China's demand. Another important factor that influences investment choices in the oil market is the situation in the Middle East. There is still a risk of the Palestinian-Israeli conflict escalating into a broader regional conflict involving other countries, primarily oil-producing ones. This, in turn, could lead to energy supply disruptions, given that hostilities have somewhat eased, and the market is currently in a relative lull. However, everything can change dramatically at any moment. Brent crude oil futures have been trading under selling pressure for 2 weeks now. The asset lost nearly 10% and then got stuck in a sideways range. And this is the fourth day it has been moving around the variable support level of $84.50 per barrel. If the quote fixes below this mark, the benchmark will resume losses. Gold seems to be more stable. The yellow metal has just moved to the lower boundary of the range limited by the levels of $1,970 and $2,000 per troy ounce. Its key driving factor is the Palestinian-Israeli conflict as well. Thus, gold will most likely surge if hostilities suddenly intensify and Israel launches a full-scale ground operation. As long as the odds of that happening are high, the metal remains at relatively high levels. Meanwhile, the Russian currency has been trading in the range from 92 to 94 rubles per dollar for 2 weeks now. Currently, it's near its lower boundary. The market has taken a wait-and-see approach in anticipation of new restrictions from the European Union, which are still under discussion. However, the prevailing opinion is that the new package of sanctions will be even more toothless than the previous one, which has had no impact. In this case, the dollar-ruble pair will probably move to the level of 90 rubles per dollar. Until then, the market is likely to remain relatively stable. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. And see you soon!